Good morning, MMT. It's 7:24. It's 10/22/2013. This was the $350 call in the money. When Netflix reported earnings last night, they opened the stock up here on the high of 389.16 and just hit the low of 353.22 pennies. That's a big reversal. The put side was working, but look at what they did with the calls here, folks. They opened the calls. That was a 350 call that was in the money. So the people that bought them yesterday at 25.35, they opened them at 39. They make a high of 40.70. But look what happened. When Netflix had that huge reversal, they took those calls down to buy them at 11.20. They took $30 premium out of the call buyer and really marked this down. And this is all the reason why you need to be here, because this was the other side of the trade. From an earnings play that was extremely overbought on the gap. So the calls were totally inflated. They took $30 premium out of the $350 call intraday morning at 7:25 a.m. Pacific Standard Time, 10/22 of 2013, and let it be known on this very day that it's a volatility on the earnings, how to get that bottom, but how they stole that money away. Look at, and people never sell at the highs. There's only a couple contracts sold up here. And then they washed them all the way down to 11.20. Look at yesterday's close was 25.35. People wrote them below there down to here and sold out because Netflix, they thought it would keep going above 400 forever, and it did not. And in the other videos, we featured some of the call options. This is the only one here against the put options. And we clearly can see that the Netflix chart behind me is moving in full swing. Google has a reversal, everyone, right up here at the highs. So there's its counter trend. We'll get to that one later. So here's what we're going to do. Once again, that's the reversal on this wonderful 15-minute chart. 389.16 to 353. Now, we know that behind here, we had the 385 puts. They finally printed $36, $15.90. They've marked these all the way down. I just want people to know what they did with the 350 call. They got marked down big time. They're below the close. And so people don't sell these out, and they get very disappointed because it was the company called Netflix, and it can't do anything wrong on its earnings report. This is the morning after volatility. This is what this is. In price discovery, using the options market, and not only that, we can clearly see that the call got marked down from 40.70 to 11.20. We can clearly see that the 385 put was 15.15 and got marked to 15.90 and made a real big run. Now it's pulling back and the calls are going higher based on this bounce down here. Let's take a look over here again. 395 put. Wow, $41. They marked them down from 55.82 to $20.60. Look at that big move up here to $41. That was on the 395 put in the money of that opening bell. And how did that happen? Wow, look at the 390 put. They finally printed 29.92. They're higher than that right now. And you can sell them up here. You can see the bid and ask ranges, but you can also see the bounce off of the bottom and how this call worked at the same time. They took all the premium out of both sides of the markets, and that's what options can do to people on the options market now. Now, when you're trading the equity after hours during an earnings report, anything can happen, but this is how you come back the next day and then clean their clock. And that these calls are going to set up another price ranges. They're still marked below the close, depending on how this 15-minute bar right here sets up now. Depending on how this 15-minute bar continues to set up here, right here, is how we're going to find out what that lower value is going to be on pullbacks on the call side now. The put side, they were both marked down. That's the lesson learned.